Good morning, natural gas traders. Welcome to the weekly update show where I break down natural gas for you guys, support and resistance, as well as characteristics and what I'm seeing going forward. And let's get into it. So right now we finally broke out of this falling wedge that we've been looking at for many months, ever since beginning of the year. You can see this falling wedge right here. It's been testing its resistance up, back up there, resistance here, support. And weeks ago, I was talking about how I have a quadruple bottom support here, 1, 2, 3, and this is the fourth. And we could just good time to get in and set a stop loss below it. And your target would be first target would be this rising wedge. If we break out of it, it would be this 2.3 range where you can see all this resistance over here. And you can see initially we rejected from that resistance this week. We pulled back twice into it and formed a nice higher low. And on Thursday, we had natural gas report. And after that, we broke out of pretty much all the resistance into this zone right now. So right now, this is the zone that we are testing. You can see we got pretty close to it, but it doesn't have to be exact. You can see all this wicks on top of this level. It's just similar to this one right here. So what do we have to look for going forward? So right now we are finally got our daily uptrend since any of us can remember, because I have to pull back the chart quite a bit into last year to see even a daily uptrend. Daily uptrend was formed right here. You can see when we broke below the pivot low, meaning prior day's low, and this candle was lower than previous day's low. That was our first pivot. So that would be the higher low versus this low. So this low is higher than this low. And when we broke above the prior highs, that became our first daily uptrend. You can see this wave up, wave down, wave up, breaking above this prior high, confirming the daily uptrend as well as we broke. Initially, we didn't break this resistance right here. It rejected exactly, but the next day we broke out of it with a daily uptrend. The daily uptrend is continuing. You can see this wave up, pulled back. Now this is the next pivot because this candle was lower than this candle, just like this one right here. And then we broke above this prior high. So now the daily uptrend is still continuing. And so what I'm looking at into now is very likely a sideways like this, where we trade continue like around this level, bounce off of it. That would be a good sign for the bulls that there's people actually buying in this range. That's the last thing we want to see, something like this, where we finally got a nice move up, and then everything kind of just fades away, which has been the characteristic of natural gas, how it trades. So that's the most important for me. For natural gas, you definitely need to be very careful with your targets and stop losses in case it just fades and fades. Next thing you know, fades. So make sure to respect your stop losses. And what I want to see is we bounce off of this level. If we do pull back, pulling back is very normal for all the stocks. Even consolidation, just let's say we pull back to here, it'll still be a very healthy move due to the size of the move that we got from the low of this move to the top of this move is 16%. So if we do pull back to this prior resistance, now it's becoming support. You can see it was acting as support here. All the support bounce off of here as well. So what I want to see as a bull is when we pull back here, we want to hold this level and bounce. That would be let's see how much of a retracement would that be. We do pull back into that level. If we do pull back here, it's a little bit over 50%. Where's the green line? Oh, yeah. Because the green line is 50%. So we don't, as a bull, you don't want to see it pull back over 50%. 50% is roughly right here. If we only pull back roughly to 0.382% over here, it will still be a bull flag on the daily time frame. And if it does pull back more than 50%, then the most likely scenario is more of an equilibrium. And equilibrium is something that forms, let's say it pulls back over 50%, then it'll be something that tightens up. Meaning equilibrium is a tightening range forming. So potentially look something like that if we do pull back more than 50%. Um, you measure from a weekly time frame, from the bottom of the move to the top of its move. That's a um, so even if we pull back to here, that would still be a potential weekly bull flag. So we pull back to here, 382, then we can chop around, consolidate, and tighten up, then potentially confirm a weekly bull flag. But if you're a bear and you shorted on Friday, I would put a stop loss above here, above this level of resistance. So if it does end up getting over, there's potentially another leg up. There's not much resistance over here after that. The only thing is just this little cluster traded here and this little bit here, which is just these two levels left. And you can see there's not a lot of volume traded anywhere here. So the less the less volume traded on its way down, um, meaning the easier it is for it to go back up because there's not much resistance left, right? For example, if the amount of volume traded here, when the price gets back into here, everybody that was holding here wants to get out, right? Let's say you've been holding for since February and you've just been chopped around and you're like, oh my gosh, I I wish I can just get out break even. And finally, we had such a nice move in a short amount of period of time, 36%. And you're like, all right, I'm going to get out. And it's essentially, that's what's the psychology of the amount of volume traded in a certain area is in practical terms. So that's how we got this very first candle. There's only one candle. That's is not a red flag. As long as we hold above this level, bulls are fine. And the daily uptrend would be our guide as well. So if you're a bear, looking to short out, or you're already in a short, this is the next level, key level for here that you want to play. Make sure that the price doesn't get over it. And your target would be back under this area. Your target would be here, your first target. This is the this was a key resistance, so now it's going to act as key support. All right, that's all I got for you guys on natural gas. Everything's looking a lot better for the bulls. You can see after breaking out of the rising wedge, we had decent volume coming in as well for the bulls, and finally made its first daily uptrend that we can even remember, and it's a very good sign because even over here on this move, right, there was no daily uptrend formed. So when there is no trend change, the likelihood of it just giving it all back is a lot higher. Meaning this was a nice move, and when it first pulled back, then just no buyers left. Nobody wants it anymore. But something like this, pulls back, buyer stepped up again, pulls back, buyer wants to get back in again. So that's how its importance of trend change is. Yeah, so it's looking a lot better for the bulls for sure. Hopefully it continues. We pull back here and then the consolidate a little bit and then continue with the trend, daily uptrend. So always follow the trend for natural gas um, because this thing just goes with the trend, and if we don't want to see this kind of fade again. So make sure to set your stop loss, and I will see you guys next weekend for natural gas traders. And if there's anything I see during the week that is very substantial, I'll update you guys again. And on that, tomorrow I'll be updating the big tech stocks. I'll be updating all six of them. So NVIDIA, Google, Amazon, Apple, Microsoft, and Tesla. So I'll be updating those six tomorrow on my video, and make sure to check that out. I do that every Sunday. And have a good rest of you guys' weekend. I'll see you guys around.